This is what some buyers will do is during the process of their down payment, choosing the wrong loan could cost you thousands, and most buyers don't even realize it. Hey guys, it's Hunter from Damon, Gettier and Associates, and today we're going to be talking about FHA versus conventional loans and figure out which one's better for you and why. Let's dig into it. Choosing the wrong loan could cost you thousands, and most buyers don't even realize it. So let's clear it up in plain English. The loan you choose affects your monthly payment, your upfront payment, and what you'll pay over time. Let's start with looking at a FHA, or some refer to it as a first-time home buyer loan. So for an FHA loan is backed by the government. This is for people who may have a lower credit or have minimal saved. The down payment typically required for FHA is 3.5% of the purchase price, and that's just your down payment. That does not include closing costs or anything like that. FHA requires a 580 credit score. With an FHA loan comes PMI, which is private mortgage insurance, and that is on the life of the loan. You cannot get rid of that when financing it through FHA. And what that is essentially it's an extra that you pay per month to an account to the government that is not refunded to you. You can't get it back. It's essentially insurance. It's the mortgage holder that is their insurance, if the time ever comes to where you have not paid your mortgage. FHA is great for first-time buyers or for those possibly building up their credit or just, maybe only have a certain dollar amount in the bank. It's a great program and is used widely throughout our area. Now on to a conventional loan. So this loan is not backed by the government. Typically we see down payment range with a conventional loan, the minimum being 5%, all the way up until 20%, 50%, essentially you name the number with a conventional down payment. A misconception is that 20% is required for a conventional loan. That is not true. 5% is typically required. There are some programs, where you can do a little bit less, maybe around 3% conventional. Those are few and far between. For a rule of thumb, we like to say the minimum is 5% down. At 5% down, you do pay private mortgage insurance. And just like with an FHA loan, the only difference is with a conventional loan, your private mortgage insurance falls off when you have 20% equity in the home. Another way to commonly avoid this is what some buyers will do is during the process of, their down payment, they will go ahead and put 20, 25% or more down to avoid, paying PMI monthly. But the main difference with PMI and a FHA versus a conventional loan is that PMI does come off eventually on a conventional loan, whereas FHA, it is there for the whole life of the loan. Credit score differences between FHA and conventional. FHA, like we talked about, is you want to be a 580 plus. With conventional, we typically see 620 plus. It depends on the lender program, which lender you're talking to, but most want to see at least 620 plus. With every loan program, it is different. Some certain lenders may require a 650 plus. It's good to talk with your agent and your local loan officer, to get the specific requirements for them. We typically say that conventional loans are better for long-term savings due to the PMI eventually falling off, or you're just bypassing it in the beginning with the 20% down, or once you get 20% ownership in the home. We typically see people who have the money, that 5 to 20% down, are going to do a conventional loan program just because of the potential savings if they see themselves in this home. If they see themselves in this home 10 to 15 years down the road, or maybe it's their forever home, we typically do see conventional loans just because of that savings that comes into play with PMI not existing or existing for only a limited amount of time. So some real life scenarios of this that we, real estate agents encounter daily is going to be, if a buyer only has, $8,000 to $10,000 saved, their credit score may be, 580, 600. We're going to direct them in the path of FHA because it is just a better suited program for them rather than them having to wait longer amounts of time to get their credit score up to where a conventional loan would be considered. If they want to get in a house the quicker way, then of course, FHA is a great option and tons of people use it throughout the area. We typically see people use, when they've got, let's say $20,000 saved and a 700 credit score. We see those people often go in the direction of conventional just because, the benefits and the long-term savings that they're going to reap from having a conventional loan versus a FHA loan. Tips for deciding between FHA and conventional loans. First, I'm going to recommend you get with a local lender and they can put them side by side for you. you, assuming you qualify for both. The second thing to look at when deciding between the two is how long are you going to stay in the home. When looking at FHA and conventional, you're going to look at how long you're going to want to stay in the home. You know, if you're buying a home in a city that you plan to be in for a couple years, then it may not be the wisest decision to do a conventional loan. You're going to use up, you know, a lot of your saved money. Whether with a FHA loan, you could just put the minimum down. Obviously, you're going to pay private mortgage insurance, but if you only intend to keep the home for a few years and it's your primary residence, then, you know, FHA may be a good option to go that way. Whereas you're looking, you know, for your forever home, in order to save, you know, that PMI whenever it falls off of your mortgage payment, it's probably going to be wise to go the conventional route. If you're unsure of what loan type suits your situation, connect with me and I can get you with a local lender and have them take a look and guide you through the process. So if you're in the New River Valley or surrounding areas and looking to buy a home, feel free to reach out to me at 540-202-1405. So if you enjoyed this video, please like, subscribe, share, and comment down below. Thanks for watching, and I'll see you in the next video.